Hi everyone, thank you so much for joining me for yet another video on how to trade options. So today we're going to be talking about option expiration. Now this is just going to be a quick guide into understanding option expiration. So if this is your first time here, welcome. My name is Kirk with Tactical Options Trading, and we make videos just like this on a consistent basis where we talk about the stock market and options trading. If you'd like to learn more, consider subscribing and clicking that bell so that you don't miss out on future content. All right, we're talking about option expiration and a quick guide to understanding what option expiration is. So if you're a stock trader, you don't need to even know what option expiration is, because if you own stock, that stock does not expire. But if you're an options trader, you need to know when option expiration is, because your option could end up worthless if you're trading the wrong strategy. So you're never going to hear it as a stock trader, but as an options trader, you're going to hear about option expiration. It's something that you're going to use in every trade. Now, unlike stock, options have expiration, and when you buy and sell options, you also agree to that expiration day in the terms of that contract, or that contract that you're trading. So when we're trading monthly options or weekly options, technically speaking, the monthly option expiration happens on the third Saturday of every month. But because Friday is the last day that we can actually trade those options, everybody refers to it as expiration Friday. But technically, they do expire on the third Saturday of every month if you're talking about monthly options. Now, if you're talking about weekly options, they're also going to expire on that Saturday, but they expire weekly depending on what option series that you're going to pick. But in general, we here at Tactical Options Trading like to trade the monthly contract because of the liquidity, because there's a little bit more liquidity in those monthly options. So I want to show you guys what I'm talking about, get an idea of these concepts. So right now we're looking at a chart of SMH, or an options chain of SMH. Let me just close these series up here. And you can see over here on the left side, you can see the different series that are available for us to choose from. Now you can also see the days until expiration right here in the parentheses. So this series would have 3 days left until expiration. This series here would have 10 days, and so on, all the way down. Now the series that are in gray here are the monthly expirations. So we have the October here, we have the November here, we also have the December. Now the ones that are in gold are your weekly expirations. So you can see we have the weekly for expiring in 3 days. We have a chunk here, and then the next one would be our monthly. So you can see that we have monthly and weekly, and depending on which one you're going to choose depends on the strategy that you're using. Now I want to show you guys some liquidity in XLF. So we're going to open up the monthly option series, and we'll also open up weekly option series. Now you can see here on XLF that this open interest column basically shows how many open contracts are open at these strike prices. So you can see here versus the monthly versus the weekly. Let's say, for example, we're looking at the 29 strike. Take a look at this, guys. So the 29 strike right here has 194,000 open contracts in the monthly series. Now if you come down here to the 29 strike in the weekly series, we only have 20,000 open contracts. Now looking at the 30 series in the monthly, we have 114,000 open contracts versus 922. So you can see right there, we got a lot more liquidity in those monthlies versus the weeklies. So I just wanted to show you guys that. You can see the same thing over here on the put side as well. A lot more open interest over here on the monthly versus the weekly. So why is this important, you guys? Why is this important to understand those option expirations? Well, in the simplest sense, knowing the expiration day is important because it sets the time period for your trade. So in other words, it's the time period for your trade to play out, or your strategy to play out that you're working on. So as I mentioned, we have days till expiration, and the time left until expiration is called the days till expiration, or DTE. And knowing this is important because it shows us, depending on the series that we're playing or the strategy that we're playing, they all work together to help you make your trade come out right, or your probabilities of success depending on the option series that you pick and the strategy that you pick. So just know that from the time that you place a trade, an option Greek called theta is either going to be working for you or against you, depending on if you're a buyer or a seller. So as a buyer of an option, theta will be working against you. And as a seller of an option, theta will be working for you. Now, if you've ever looked at a options decay chart here, which you can see right here on the right side, we're looking at 120 days down to 0. And you can see that the option value is going to decrease more rapidly from about 30 days down to expiration. So 30 days till expiration is where we have the most time decay or theta decay. So if you're an option seller, that's a good thing for you, because maybe you're going to sell that about 30 days out and look to buy it back at a lower price a little bit closer to expiration, somewhere in about this range. Now, if you're an option buyer, that could actually go against you if you were buying at this point, because every day that option value is going to go down a lot faster. So maybe as an option buyer, you would want to buy somewhere out here because the decay is a little less gradual the closer you get, until you get about 30 days out, and then it really starts to drop off. So picking that series of options depends on your strategy and what you're doing, if you're buying or selling. So which expiration to choose? Well, that depends on your strategy, as I mentioned. And if you're a day trader, you'd most likely just want to pick the closest expiration, because if you're in and out of that trade on the same day, that theta isn't going to affect you as much as if it was if you were over a 2, 3, 4, 5 day period. So maybe if you're a day trader, you're going to pick that closest series and play that. Now, if you're a swing trader, you may want to choose an expiration that's further out, like maybe 40 to 45 days. Now, as I mentioned, if you're an option seller, maybe you'd like to sell premium a little bit closer in, maybe 25 to 50 days, because of you're going to get that time decay a little bit quicker. So one thing to make sure you know of is that you'll want to be aware of is earnings, and when earnings are being reported on the underlying stock. So there are strategies that you can play around earnings, and usually a trader would use the closest expiration cycle for those strategies, or will knowingly buy or sell in that earnings series, because depending on when the earnings is, you don't want to buy an option or sell an option if you don't know when those earnings are, because it could actually come out and bite you. So not being aware of when earnings are can turn actually a good trade into a bad trade. So make sure you know when those earnings are, so that you are aware of that, and so you don't ruin your trade. So in conclusion, guys, expiration day will get easier with practice picking those expiration days. And before I actually go through this conclusion chart, I want to show you guys something here. So we're talking about earnings, and if you're looking at the Thinkorswim platform, let me just close these up here. Looking at Thinkorswim, you can see that Thinkorswim's great. In the watch list, you can see that it will highlight earnings for you. You can see that this little light bulb right here is the earnings. It's telling us that earnings is coming up on Caterpillar. So if I click on that, you can see that it's telling us that earnings are going to be on October 23rd, 2018. So if I come over here to this options chain, I will already know what series this is going to be in. So it's October 23rd. So this is, I think it's expiring on the 12th of October. This one's expiring on the 19th of October. So these are both going to be expired before earnings. This one's expiring on the 26th of October. So I know that this one right here is going to be the earnings series, or earnings is going to be reported within that time frame. These two are going to be expired. So this one is going to be the one that's going to be affected. And you can see, looking right over here on the right hand side, that this implied volatility is going to be higher on that option series. You can see this one right here, the 26th of October. We come over here, we can see that implied volatility in that earnings series, or in that option series, is going to jump, or that earnings series. You can actually call it the earnings series. So it's jumping from 29 and 28, which is the normal, up to 36. So that'll give you an idea that those are going to be a little bit higher priced, or that option series is going to be affected by earnings. So something to be aware of. So I just wanted to show you guys that so you knew what to look for when you're looking at earnings, to know if your options are going to fall within those earnings or not. So remember, keep in mind what we talked about in this video. So picking this can be, picking your expiration days can be kind of a challenge for younger, newer options traders. But keep in mind what we talked about in this video. We're talking about liquidity, monthly expiration versus the weekly expiration. Keep in mind your style of trading, whether you're a day trader, where you're going to be in and out on the same day, or you're a swing trader, or you're an options seller. Maybe you're going to be, playing those options series that are a little bit longer. Or if you're doing some earning strategies, know which series those earnings are being reported in. So guys, just keep in mind those things when you're looking at picking your expiration day. So you guys, I hope this video has been helpful. I've enjoyed making it. Thanks so much for watching. Please post your comments below. If you have any comments that you'd like to make or questions, post them in the comment section below. We love making videos like this all the time. We love to hear ideas for videos. If you have some ideas for videos, post those in the comment section below too, and let us know. But again, thank you so much for watching. Give us a like and a subscribe if you felt this video has been helpful. Possibly share it with somebody if you think this video could help somebody. Thank you guys so much for watching. Appreciate it. Have a great one, everybody. We'll catch you later. Bye-bye.